April 29th. We're coming towards the end of this month, but we have a big week. We have the Fed, we have the Treasury refunding, and to top it off, the NFP on Friday, which is going to be, I think, a market mover. And we have a lot of interesting inflection points in front of us. When I start off with the euro last week, I put out a sell up here, took some partial profits. And I'm thinking that there's one more shoe to drop in interest rates and that we're peaking in yields, but that there could be one more bout of higher yield pressure before that occurs, which, based upon the RSI, I'm still looking for one more low. In the euro, I've given out targets under 106 where I'd be interested in long positions. And I have to say, this week is a very important week in the dollar because it's not going to take much for a sell signal. I'm still viewing this as a way forward, just like euro, where we could get one more pop up to take out the highs marginally. But I'm also prepared, and this is what you have to do, is if that doesn't manifest and we start to sell off, your first real important level to be violated would be this 105.10 level. If you look left, you'll see that was a pretty important high that we had back there in February. And then once we broke out, we retested it. So 105 is big. And then, 103.80, I've used a few times. That is big too. So if we get a close or we get action under 105, that's going to be bearish. 103.80 actually is going to take it down to par. So, I'd have to pull up a weekly, but I do believe there's a big dollar sell setting up. The question is, can we get one more push up? Well, my opinion is yes, or I still wouldn't be short euro. One of the reasons I'm short euro is because of the formation in euro pound, which to me looks pretty bearish. And, a lot of people are trying to bottom pick this one. But if you look at the daily, we rallied up to a descending triangle line, and look at all these hits here at 85. 1, 2, you could call some of these 3, 4, 5, 6. So if you think 85 is going to hold, I've been joking that I have some cubic zirconium for sale that you could buy for your sweetheart, or even some swampland in Florida. I'd sell rips if they happen up towards 86, wrong over 86.70. We take out 85. We'll see how much follow through we get. But when this pair is heading down, your preferred short is a euro. So that's why, the euro is my short. And you could see how the pound is holding up compared to euro. Pound's still up 33. So the euro is a big part of the dollar index. The big news is what happened in Japan last night around the Tokyo fixing. And, I was in dreamland when that happened. People are saying we still have to take out 52. I just think that the trading now is going to be more difficult. I'll watch a rally, but what, this RSI figure before intervention was, almost 90. So to me, it's a no touch for the moment, and there are other things to do. We'll see what happens with Canada. Canada had a nice pullback. This will be a big tell. Say, for example, the DXY just makes a marginal new high, right? It takes out this 107, this recent high that we had up here, and we go to like 107, 106.80, and Canada only recovers half, like only gets to 37.50 and doesn't make a new high. That's going to be a great market signal to sell a failing rally in Canada, because this was pretty deep, similar to Aussie. Down here, I thought we'd get a third drive. I mean, it's been a tremendous rally. It's hard for me to see new lows now. I think it's probably going to be a higher low, even if the dollar does make marginal new highs. The key is going to be yields. Here we go. Let's talk about these yields right now. So here's your 10-year. We're down a couple bips. I know it's a 4-hour chart, but when you look at it longer term, it looks like drive 1, drive 2, maybe we get one more. And here are the two scenarios I see in the dollar in the yields. So we got up to 78.6 back is 474, and the high was 473.90 last week. So we're either going to peak here and start to sell off, or are we going to get a third drive to a top and take out this 5% level by a little bit? It looks much more feasible on the short end of the curve. Here's your 2-year. See how much closer it is? So maybe the 2-year does it. You only need, what's the high here? 525 looks like the high. So we'll see. This looks like we're getting some distribution here. And then more importantly, I've been talking about the wedge formation in TLT, and pre-market, we were trading back inside of it. That's why you have to wait for a close. But here you go. The weekly, it's not going to show it as well as the daily. And let me just zoom in a little bit. And it's going to open at 88.63. So that's going to be right about there. So you got to wait for a signal. So there you are. You need a close as a signal, not what it does intraday. Because, it could be inside this formation like it has a few other times and not be able to hold it. In fact, I'd like to see one more shot down towards 86, 87-ish for a 1, 2, 3, and we'll have some nice divergence. I may even take an attempted long there. So, a lot of key things to move rates, the Fed, the refunding package, and the NFP this week. And just want to talk a little bit about precious metals. You guys know I've been talking about that we might get some type of correction. I still think that's the case, that we're going to see, maybe 22.50, 22.5, and silver as well. Silver still looks weak to me. I'm looking for this breakout to be tested. Comes in around 25.70 or so in the next week or so. And I just want to cover the gold, the miners. So I'll go with GDX as an overview on the miners. And okay, we opened up a little bit here today. So here we are. So we peaked at 35.5, almost 36. I drew the fibs in here from the low of the move at 25. Boy, when I called the bottom here, I sure didn't expect this. I expected maybe something like this and then a pullback. But here we are. It looks like we've peaked, and that we could get some type of pullback towards 31. 30.70 is halfway back. That'd be a nice entry. Maybe we go 61.8, which would be 29.5. We'll see what happens. But I will be looking to buy miners should that manifest. And now let's talk about risk. So the risk we had last week, I said that I was expecting a recovery towards 51.50. And even when the market was down sharply, early last week on some bad earnings, we put in a higher low, and I still think we're headed up towards this between 51.5 and 52. And what's interesting and something to keep an eye on is that last week we had what's called an inside week, because we never took out Friday's lows. We just opened higher and rallied. So now we have the potential of an outside week. So it looks like the 9 days coming in around 51.42. And remember, this 51.49 was where we started to accelerate. But we could press it, head up towards 52 as well. But when you have an inside week, be alert for potential outside week following that. So the high last week was 51.18. So far we have taken out the high of last week. Should we take out the low of last week later in the week, that would be a very bearish signal. That makes 4,800 just a layup. And I have a lot of company looking for 4,800. Makes me think it's either not going to get there, or it's going to melt through it. So we'll see. But the key takeaway from this is I see this as a sell on a rally. I see NASDAQ as a sell on this rally. Wait for these moving averages to come up around the 18,000 level. It's not that far away. Here's your daily. And there you go. So there's the 50-day. We're under. So around 18,000 NASDAQ looks like a short. I'd even be looking to buy pullbacks in VIX. And here's the reason why. And we've had quite a pullback because of last week. First of all, there could be some geo stuff that begins again, right? Because Passover is over at the end of the month. So that's 2 more days. And just like the Iranians waited for Ramadan to be over before they struck Israel, it's very possible that military action begins in early May, with probably going into Rafah, which will include more global condemnation and most likely more attacks. So if you think it was just a one-off between Israel and Iran, you're hopeful. I hope it was too, but I don't think it is. So some geo risk will come back on the table in May as the holiday ends, the Passover holiday ends. And this was a pretty good rally in VIX, basically from 12.5 to 21.5 was 9, call it 9 points. And if this is going to be a C wave, which I think it could be for the S&Ps as we're heading towards 5150, you take 1.618 of 9, it's going to give you 14. So if we bottom between here and 14, you're talking about 28 to 30 VIX, and maybe as soon as sometime in May, which is when I'm looking for some type of low. I don't know if it's going to be a low for rally to new highs in the market or just another failing rally. So we'll see. If I'm right about the dollar, it should be bullish for almost all asset classes. So we'll see what happens there. I have a great, very experienced trader coming in Wednesday, Don Mead from Seven Sentinels, who does a lot of historical work that is saying this is that was the end of the bull market. For me, the jury's still out, so I'll play devil's advocate when Don is here with us on Wednesday at 10:30. So the takeaway is, does the dollar have enough in it for one more high? Can the euro take out 106, maybe trade 105.20? Do we get this correction in gold towards 2,200? Looks like kind of a bear flag. And does silver come back to test the breakout down here? Look at how the 50-day moving average is converging with this. And are the bonds going to turn this week with all the interest rate pressure that's going to be upon it? Here's TLT. So now you can see on the daily, now we're not above the wedge line. So we already took away what was happening pre-market. So I'm thinking one more low, maybe towards here. And we will have some real nice divergence. It'll be a 3-driver. You have 1 here, confirm low. Here's your first divergence, and it's above 30. So even if we go to 86, I think we're going to have our second divergence there. So that's my wrap on the market, and a lot of, kind of exciting inflection points that could occur in the next couple weeks. And regardless of dollar action, I gave you where it would start turning ugly. I will have a position, I believe, before the end of the week. I'll leave you with the 2-week off number for the dollar. How you figure that out is you just take this week's candle, count back 2, and the close 2 Fridays ago from this coming Friday was 106.11. So, we're currently underneath that for a 2-week reversal, but you don't get that till you have a Friday close. So if we close under 106.11 by the end of the week, I'm short dollars, no matter where it is. And if we get a rally, you guys know what I'm looking for as far as buying opportunities in Euro cable. Cable's probably the preferred long. In fact, is it possible that Euro makes a new low and cable only retraces this? The reason I say it is I took a look at the 2-week off number in cable and it's all the way down here. So, maybe we're just going to test this, which comes in at 23.65, which is 160 pips from here, 23.65, but would not be a new low, right? Because the low is 23. So it's very possible that we just pull back for 2 while the euro's making a new low and cable puts in a higher low. That 2, just like Canada, if the dollar's making a new high and Canada can't, and if the dollar's making a new rally high here and cable can't make a new low, that's going to be an important thing to notice and execute on as well. So I hope that this gives you an edge going into this week. Be careful on red event days and don't try and predict how the market would react. React to the reaction. I believe Mike will be with you later on today. Good hunting, and most of all, don't just count your pips, count your blessings. And I'll see everyone tomorrow for the Mike and Dale Show. Adios.